Hi, Richard Martin here from the Market Forecaster. It's Thursday the 9th of September. This is a chart of the Dow daily, and you can see the overhead resistance here stemming from April this year, which was the 61.8% retracement of the previous high in late 2007 all the way through the GFC down to March 2009. That's the retracement. Consider that the end of the recovery rally, and since then we've been moving down in this bear trend, and more recently in this correctional trend, the three waves up here, three waves down there, and then back up here. So what's it likely to do? Well, this is overhead resistance and it's extreme. We're falling off the 200 moving average at the moment. We'd expect some upside, although it doesn't have to, strictly speaking. It can push to the downside. Having said that, in the event that we get a very strong breakthrough, a blast through this resistance, then this high of 10,681 would be under pressure. Looking at a weekly of the ASX 200, which is of course the bases on my charts are all a SPY. I just wanted to show this curling over that's happening. Often you get these breakthroughs and then a retracement, a retest of the 50 moving average, and then a continuation of that particular trend. We can see that this is a complex correction, but also if we go back over to the start of the GFC when we left 6,000, it came up testing this long-term trend line, tested it and then failed, of course, and moved on down, but also tested not quite to the 50 moving average, but not far off it. So on the daily chart of the SPY, it's a triangle: A up for 3, down for 3 to E, and at E is usually the termination points of these triangles. It's not to say that in the very short term we're not going to see just a little bit of up here to complete this pattern, but strictly speaking it doesn't have to. We'd be looking for a folding over of the MACD, this moving average down here, but in the event that we see a move through this short-term moving average, we'd expect the bearish pattern to continue on. So there'd be some economic rumblings from the other side of the world, North America or Europe, to validate the fundamental reasons behind the push. But technically that's where we sit. As we look at the Aussie dollar, it's looking for some upside. It wants to test this 94 mark here, or slightly under 94. We mentioned previously that we'd expect a little test of the rising trend line here. That hasn't happened. We've got this very bullish candle here, which is a bullish engulfing pattern, which completely, as the name suggests, engulfs the previous day's pattern or bar, and it is looking to move up. But don't be surprised to see it moving exactly in line with the indices. On the euro, this is an important chart to be keeping our eye on because of what's happening in Europe at the moment. Clearly that was the bearish news that came out about a resurgence of the potential for sovereign default. The fact is that the Germans, and whilst the IMF hasn't been brought into this equation as yet, but the Germans are talking about, of course, the raising of in excess of 100 billion from within the Eurozone to accommodate the concerns in those countries that have been mentioned so often, in Greece and Spain and Portugal and Ireland and a number of others. So what's likely to occur is perhaps a little bounce up here and then a convincing break through the trend line. We can see down on the relative strength index this has occurred already. So this is weakness. It looks like a wave 2. There's the ABC in the relative strength, as it is indeed in the actual physical market. Gold, weekly, moving up, continuing to move up. Is it actually a wave 2? Well, it certainly has that characteristic of an A to B, which in fact there's 3 little waves here, but you can't quite see that on the weekly. Well, that long tail is actually a part of the B wave, but it is certainly going to retest the previous high at 1265. Just what it looks like will yet to be seen, but on the relative strength we can see that it's testing the downtrend now, and perhaps it'll poke through. Well, we just don't know at this point, but we'll stand by. On the daily chart you can see these long tails starting to emerge. that is selling pressure and uncertainty. So this yesterday's bar was a good one. I'm not sure that it's actually a gravestone doji as the Japanese candle system suggests, but if I widen this out, you can see that there is a significant amount of indecision in this. In the event that this line is broken, we would indeed expect it to fold down very quickly, very sharply. A bit like these patterns over here, you can see that when they're broken, they move very quickly. Here's another one. So this has been a fantastic move up of $100. That's a lot of gold to cover. It's been a straight line, and for those traders that have been in this particular trade, they would have been very much rewarded as a result. Looking at oil as our last chart, it is moving up in line with the indices, although this is a very complex correction. It looks like it might come up and test the 50 moving average on the daily, sorry, the 200 moving average on the daily, but it could even come up and spike high and test this previous support line, which is now resistance, but yet that will be entirely reliant on what happens in the indices as a measure or a sentiment of demand. That's it. Go to marketforecaster.com.au for more charts, more detail on industry sectors and the stocks, as well as gold and their stocks. And I'll talk to you again in the near future.